Geoffrey Dennis is with us, independent emerging markets commentator. Geoffrey, good to have you with us here. Thank you very much. Nice, kind, lenient, harsh. I mean, all kinds of words right into the word salad, I don't know if that's the right way to use this. But what's your sense, Geoffrey? Will tomorrow turn out to be a bit of a shock event, even though we know what's coming in one sense, or is going to be the classic sell on rumor and maybe not sell off too much on news?
I think it's more likely to be the latter, frankly. It's just so confusing, and I'm smiling to myself while you're saying how much commentary there is, how much news flow there is. I tend to believe that it will be a sell the rumor, buy the news type of event. We just don't know, though, and until we do know, we're not going to be able to make some major calls here. And even if we do get something predictable or indeed unpredictable on Wednesday, who's to say that that's the end of it? I think what's disturbing to me about all of this, which makes me nervous about the markets long term, is now the breadth of the action that Trump is threatening across so many countries and so many sectors, and the threats keep coming. One thing that I keep an eye on and keep a hold of, if you like, is the fact that if you look at the 10 countries with the biggest surpluses, bilateral surpluses against the US in 2024, 4 of those 10 countries were the 4 biggest emerging markets: China, India, Taiwan, Korea. So our big markets in EM, including India, are going to be in focus here until Trump decides to put the tariff weapon away.
And Mr. Dennis, and I guess we don't know when that happens, right? It's all about wondering whether the worst is over on the second, but a lot of people do say that this perhaps doesn't get completely sorted out in one day. Whether these negotiations continue or not, who knows? But in the interim, given these uncertainties, how would you look at the emerging market complex? I mean, the US itself is faltering, so I guess money managers are looking for newer avenues. Would a market like India be in the reckoning?
I think India would be more of a sort of low beta play on the emerging markets generally. I think it's very interesting how India in the last few days has behaved like a contra trade. So India's obviously had a very good time, as you mentioned in the intro, in March so far, and yet today it's under pressure again, and that's because, as far as I'm concerned, one of the reasons anyway is that China started to rebound. So there's this China-India thing that you and I have talked about many times before. Now, I think the issues for EM are the following. First of all, if we get a full-fledged recession in the US, which I think is a growing possibility, I think you'll find that equities worldwide do poorly. I think EM will do poorly, even though the weaker dollar is helping EM at the margin. And in that event, I think India will be a relative safe haven. I say relative safe haven. And that's obviously something we have to keep an eye on. And frankly, I think the risk of US recession is being heightened. At the same time, of course, these tariffs are going to push up US inflation, makes it very hard for the Fed to do very much, at least in the short term. So I think net, we are still probably going to be on something of a negative trend for equities over the next several weeks, even if the short-term news is partly priced in. But within that context, I think India's rally in March is a good sign, because it suggests that some of the selling is over, at least for now.
Hi, Dennis. Good to see you, Ben. Dennis, it's anyone's guess what President Trump is going to do next, but what are you expecting from the Fed? You know, the probability of them cutting rates has actually gone up because the economic data is not as strong as, say, 3 months or so ago. So what are you penciling in 2025?
I've said all along, including at the beginning of the year and before all this tariff, the breadth of the tariff story really gained strength. 2 rate cuts this year, that's what the Fed thinks. I think that's probably about right. I just don't think it's as simple as it was last year. It's not just a question of how far does inflation come down, when does it come down, because inflation is kind of stuck, if you like, around 3 or maybe slightly below 3. So I think at the margin, the drivers of Fed interest rate policy are going to be, does inflation fall further at the margin? But more importantly, what does the US economy do? And are we at real risk of recession? And therefore, for me, a rate cut in June and one in the second half of the year is the base case. And I think if it's not that, I think it'll be more than that. And that would be in the event the US economy is very weak. I'm very worried about the US economy, frankly, now. And that makes me think you could get more than 2 rate cuts. And that would be the risk to my call.
All right, Geoffrey, we'll leave it there. Thank you very much for joining us. Good speaking with you. And thanks indeed for being here with us today.